Ladies and gentlemen, welcome. My name is Peter Olwatch, a stock market researcher and investor. I talk to people about the stock market, telling them to save, invest, and grow wealth. Today's topic is this: how millionaires buy shares. How millionaires invest in the stock market. I'm reading from Jim Cramer. He talks on real money. Jim Cramer talks about how he buys his shares. Jim Cramer is one of the American stock market investors. He made almost 500 million in the stock market. And he wrote this book, and I'm sharing with you his wisdom. This is how Jim Cramer buys stocks. Let's say he bought a stock, let's say KCB, for example. I'm just giving an example because the shares he bought were in America. So even if we discuss them now, it may not help you much. But since we are concentrating on the Kenyan stocks, I'll talk of the Kenyan market. Let's take, for example, Jim Cramer bought KCB at 41. So Jim Cramer says this: if the stock drops down to 40, he'll buy more. If the stocks drop down to 39, he'll buy more. But if the stock starts going up to 42 or 43, he will have lost nothing. It's only that he will have made little money. So he says that if there is a given stock, he will buy 100 shares to test the market. Millionaires buy little shares to test the market. Now, if the stock goes down, he buys more. If the stock goes up, he also buys more, because that is a sure sign that the stock is going to do well. So, ladies and gentlemen, you must test the market with little capital. Don't pump all your money in a given stock. Are we together? Don't pump your money all in one stock. Put in a little money. Buy 100 shares. See how it goes. Which direction is it going? If it drops more, buy more. If it drops more, buy more. That is the secret of millionaires. I'm borrowing American wisdom and applying it in the Kenyan stock market. This is what Jim Cramer says. What I like to do is buy my first 100 shares and then wait. 99% of the time in the stock market, we are just waiting. You are waiting for the shares to go up. There's nothing else you will do. You can't push it up. No, you can't push anything up. So you just wait. After buying, you sit and wait. Those who sat and wait for Safaricom, they bought Safaricom at 5 shillings. 5 shillings. Now, 13 years later, Safaricom is about 40 shillings. They have gained. They have gained. So what Jim Cramer does is to sit and wait. What I like to do is buy my first 100 shares and then wait. If the stock goes down a buck or two, I will buy it. If it goes up, oh well, the worst that happens is I have made a little less money than I would like. That is how I buy everything. I like to buy weakness. Similarly, I like to sell strength. So when a stock is weak and it's going down, Jim Cramer will buy. When a stock is strong and it's going up, Jim Cramer will sell. As simple as that. As simple as that. You buy when it's low, you sell when it's high. If you like this video, give it a thumbs up. If you have challenges in buying and selling stocks, drop your comments in the comment section. What challenges do you face? How can I help you? I have a solution. If you have problems buying and selling stocks and making money, I have a solution. This is a solution, and this is a very good guide. It will help you, and it will help you a great deal. Get this book. It will help you buy shares, sell shares, buy stocks, sell shares, stocks. Another solution I have for you is very simple. Join our training school. Join our VIP group. It's a stock market training school, and you will learn a great deal. Bye.